Let's wrap up the markets in West Africa, starting with the BRVM. We saw that market down 0.8% for the BRVM 10 index yesterday, and the BRVM composite was down 0.6% to 195 points. And the market for the currency is trading at 560 FA francs to the US dollar. Moving on to Ghana, we saw that market up, of course, leading others in Africa, almost up 50% for the GSC composite, while the GSC Financial Stock Index gained about 0.3% to close at 1,593 points. The currency currently trading at 1.96 CDs to the US dollar. And for Nigeria, we saw the market fall back after gaining in the previous session. The NSE index closing at 33,271 points. The year-to-date change for that now stands at 18.5%. Let's now cross to Stanbic IBTC, where Esili Eigbe is standing by. He's an analyst with Stanbic IBTC, and he would run us through some of the numbers we've seen recently in the market. Esili, I think we need to focus on Unilever's numbers yesterday. I saw the note you wrote recently. You said it's a bit of a deja vu. We've seen this before. Your thoughts on where that company is positioned right now?
Good morning, Wale. It's a pleasure to be on the program. I think that Unilever is well positioned in the Nigerian HPC market. It is the second largest producer of detergents today with the brand Omo. They've also got a supporting mainstream brand called Sunlight. And they're also well positioned in the oral care where products like Close-Up are pretty strong. But in our view, the numbers published yesterday for the first quarter 13 were quite weak, quite expected given challenges that they experienced during the period. For starters, you have relatively weaker volumes from two key product lines on the oral care side and also on the you also had some weakness as well experienced in the blue band segment. That's the spread category. Right. Obviously suffering from some threats in the grey market. Close-Up, on the other hand, was experiencing a bit of a resistance when the company increased prices.
All right. Is this more a case of the impact of competition, or is it just one of the things that some of those companies focused on, consumer good companies, are going through, given the impact of the fuel price hike in 2012?
I think that obviously is still impacting consumers generally, but it's obviously starting to unwind. My concern, though, is there's still no clarity as to at what point the federal government will take off the remaining subsidy, and that obviously would be a negative for consumers again. But the reality on ground is that it's a very challenging environment for consumer companies. They're obviously having to squeeze the small discretionary income or disposable income that the Nigerian consumer has, and they have to be innovative about doing this. They have to obviously have some value on the table. Nigerians do like value, right. And I think that there's also a lot of room for them to create distinctive products for people who are placed in the premium segment of the market.
Do you anticipate that Unilever can turn things around in the second quarter and perhaps over the rest of the year?
Look, I think that 2013 will close out pretty okay. We're looking for about roughly 6% growth in HIPS year on year. I think that there will be a recovery in subsequent quarters. That will be a function of accelerated marketing activity and also innovation on some of the products. I think that there are also greater operating efficiencies in play. Management is quite focused on that. We'll see anywhere between, say, 30 to 40 bips improvement in margins. So I think those are pretty major catalysts for improvement in earnings. Not to also mention the relatively benign input cost environment we're in today.
Right. I saw the note you also wrote on breweries across Africa. It seems they're also facing some pressure across the board. Your thoughts about the best opportunities on the continent these days? We know Nigerian breweries and Guinness, of course, are the
right.
opportunities if you're looking in Nigeria, but of course there are other opportunities across the continent as well.
It's a pretty interesting development. We did see numbers from Heineken, Diageo, and also SAB Miller, which indicated that the Nigerian beer market continued to soften in the current financial year, and that obviously has been negative for most of the key players, Nigerian breweries, Guinness. So Nigerian breweries hasn't published its numbers yet, but from all indications, it's going to release numbers showing that there was a slight decline in volumes, about 5% decline in volumes. That I think will be quite negative for earnings as well. But coming back to your question as to where we really see the opportunities, if the key theme that we're looking at here is, the short-term outlook for bear volumes. I think that we're quite confident with some of the improvements we've seen elsewhere in Africa, in East Africa in particular. And so we're pretty confident taking or having a great exposure to EABL, which we think is, obviously primed for growth, given some of the recoveries we've seen in Uganda, Tanzania. Kenya is doing relatively well. I mean, the volume growth numbers aren't, in the high single digits, but I think at sort of between slightly low to mid-single digits is still relatively strong for that market. Don't forget that you're also seeing pretty strong volumes from the spirit segment as well, which EABL is obviously capitalizing on, given its strong relationship with with Diageo, which is the world's largest producer of spirit brands. So we're quite comfortable with that position at the moment. It's trading quite attractively relative to Nigerian peers, about 17.2 times 2014 earnings. Nigerian peers, on the other hand, are trading over 21 times. So it's a pretty great bet for us. Just post the Kenyan elections, I think that we should obviously expect some momentum in volumes in Kenya, which is the largest market today.